Welcome on board, Keki Mistry from HDFC, and talk about the numbers. Keki, thanks for joining in. Just wanted to understand, will the lending rate cut be applicable to non-individual loans as well as, or only retail home loans at this juncture?
At this moment, the reduction in lending rate is applicable only to individuals. It's a reflection of lower cost of funds. Liquidity has improved in the system, and as a consequence of improved liquidity, we have responded by reducing the lending rates by 10 basis points. And this is a rate cut which will be applicable to existing borrowers also.
Okay. And how much of your assets are on fixed rate and floating rate, and what is the margin impact because of the lending rate cut?
The individual loans, in fact, are almost all of them on floating rate basis. Very limited number of these loans will be on a fixed rate basis.
By how much do you see borrowing cost to come down, and hence how much of lowering the borrowing cost can be passed on by end of 2019 to consumers?
Well, it's difficult to answer the question on what's going to happen till 2019 because it depends on how interest rates pan out over the remaining part of the year.
By how much will the EMI become cheaper for retail loans and non-individuals?
Well, you have to calculate that number. It depends on the size of the loan. It depends on the period of the loan. It depends on the interest rate applicable on the loan. So it depends on all of that. It's a arithmetical calculation which can be done by anyone.
Okay. What's your outlook on the real estate sector, Mr. Mistry, given the ongoing stress that we've seen? How are you seeing things shape up on ground?
No, it is a fact that the real estate market has slowed down a lot. Sales have slowed down, and partly also the fact that we see in some parts of the country that there are projects which are in a half-done stage. I think that has created a little bit of stress in the real estate sector. It's not the first time something like that has happened, and one would hope that as liquidity in the system improves and developers are in a position to get money from banks and other NBFCs, they will have the liquidity to complete these projects. But hopefully, over a period of time, sales will pick up in the market.
Okay. Solutions that you would suggest the government and RBI could implement to help revive the ongoing investment and consumption slowdown?
Well, I would say the best way to really create further demand for goods and services is to have more job creation. And job creation really comes through the real estate sector. So there are fiscal benefits which have been provided for home buyers in the budget. The tax benefit on housing loans has been increased. So hopefully this will send a signal to consumers as they get more confidence on completion of projects to buy more property in this year, because this increase in the interest benefit is time bound. As more construction happens, it will result in more job creation, and jobs will lead to more consumption.
All right. Thanks so much for joining us, Mr. Mistry, and taking us through the latest trends as you see them with regards to the outlook going forward and those lending rates.